to today's Market SITREP. My name is Matthew Buckley, call sign Wiz, the primary model portfolio manager here at Top Gun Options. And the market malaise continues today. We're just seeing about up 30 on the Dow, up a couple points on the SPOOs. And we're really, as I said yesterday, the confetti has settled to the floor after the Fed's announcement last week. And the grown-ups are starting to return to the market. What do I mean by that? The drunks are getting thrown out of the bar. And everybody's starting to sober up and say, you know what, now the economy, even though we have QE3 infinity, QE1, QE2, Operation Twist, Operation Snake eating our own tail, none of it worked. And as we talked about, none of it's going to work until banks start lending, period. Until banks start to lend and credit gets better. So the market, looking at Market Watch, housing rebound on track, and they're saying the market's, up 30, market's taking solace in good news on the housing front because of existing home sales. Probably one of the dumber headlines I've seen on Market Watch. Building permits only up a fraction. Housing starts down. And the home builder sentiment that we covered in yesterday's Market SITREP, it doesn't mean anything. How about asking home buyer or home seller sentiment? So existing home sales going up isn't necessarily a good thing. It is in the sense that we're getting rid of inventory, right? Shadow inventory. But when I was on, what do my notes say? At current rate, it would take like 16, 18 months to clear current inventory. So, and that's just of homes currently for sale, folks. That's not including, quote, that shadow inventory. Folks who are sitting back going, you know what, I'm going to wait to sell just until the market turns around. I want to move, but I'm underwater on my house. So there's a whole overhang of people who want to sell their house who don't have them on the market right now. So beware of false prophets, so to speak. A housing rebound is on track. Woohoo! Sold. Folks, there, with our economy the way it is, with the election coming up, with the tax cliff or fiscal Armageddon that's going to hit us on January 1st, going to happen, it's not good. And you really have to look at the canaries in the coal mine. And two big canaries dropped dead recently. Yesterday, FedEx, totally downbeat on the economy. I strongly recommend you take a look at today's Wall Street Journal Marketplace section. Fred Smith, CEO of FedEx, all due disclosure, I flew for FedEx for about 10 months, hated it, hated flying from midnight till 8 in the morning, and I was a young guy, early 30s at the time, and I thought I was going to drop dead. So total respect for the company. The guy's a genius, even though he got a C or whatever it was, C minus on his business school report on the idea of FedEx. The guy's a genius, and he couldn't be more bearish. He said some China watchers completely underestimate the impact of slowing exports despite the country's domestic stimulus efforts. So, and it gets worse throughout the article. Also last week, Dow Chemical, the CEO, Andrew Liveris, Dow Chemical, has just said about China, a ton of his clients of Dow Chemical are continuing to destock, get rid of stuff, while small and medium-sized enterprises were suffering from a liquidity crunch. Quote, they really are hurting and bankruptcies are starting to occur. So folks, our banker has sneezed and they're catching a cold. So when they catch a cold, that's bad for us. Okay, folks, so the market, we're going to wallow sideways. Now that the party's over, now that the market's starting to really believe that this market's going to have to fend for itself, and we have third quarter earnings starting to come around the bend, which are not going to be good, we need to really start taking a hard look at what's going on. And again, for my students at Top Gun Options and the folks that are in my live trade briefs and live trading sessions, they know this chart all too well. Here's the SPX, folks. And markets tend to go down a hell of a lot quicker than they go up. This happened over a year. The financial tsunami, we went from S&P 1500 to S&P 666. Then what happened? Well, Uncle Sam decided to get involved in capitalism. QE1, market rallies, and then the party's over. QE2, market rallies, and then the party's over. Of course, it was a shorter party. Operation Twist, really shorter party, and now we got QE3 infinity. So, is this party continue? Is it possible? Yes, absolutely. Is it probable? No. Even Fred Smith, they cut their estimates. FedEx cut their estimates of GDP growth in the United States to 1.9%. Okay, even the Fed's overly optimistic, 1.9 to 2.4% range for 2013 gets completely blown out of the water when you listen to what the SIBO has to say about the financial cliff on January 1st. They say it will be a minimum of a 3% hit to our GDP. Now, I'm a political science major, former Navy guy, so I'm not the sharpest tool in the shed, but a 3% immediate hit to GDP versus on January 1st versus a maybe 2013 growth of 1.9%, I think you can do that math, and it results in a negative number. Okay, but you wouldn't know that from looking at the markets, would you? We are at 5-year high. It's 2007, folks. Game on. Get long like you read about, and get long Gordon Gekko magazine. And I will take the other side of that trade every day. I'm not going to fight the Fed. We're trading weeklies here at Top Gun Options and Wealth Creation with Options because we are not getting long-term bullish anything. And by long-term, I mean a month. Even trading the front months in options is getting to be, October's a world away. So even talking about October expiration is, it feels like it's a year away because everything in this market is moving by the minute here. So, nice gentle climb, out of the S&P. Nice rallies since 2009. It's been great. There's no such thing as hell until there is going to be a hell. So we are absolutely hedged here at Top Gun Options with a lot of our positions because we got one eye towards the exit, folks, at all times. I flew the F-18 Hornet. Guess what? It had an ejection seat. Flying off an aircraft carrier, flying combat sorties over Iraq, you'd want to have an ejection seat. Do you have one? Do you have one for when you wake up and it's World War III, literally? Because when Israel attacks Iran, I said when, not if. When they attack Iran, Iran's going to respond by mining the Straits of Hormuz, and oil's going to go to north of $200 a barrel, maybe temporarily, but who knows. And then Iran's going to retaliate by attacking U.S. military forces and interests in Europe, Turkey, the Middle East, and Egypt and Syria are going to get on board to help Iran out and attack Israel. So, not a big, I'm a recovering Catholic and was an altar boy and all that stuff and not too biblical, but I got to tell you, it's creeping me right the hell out. And what's creeping me right the hell out is smart people like Fred Smith or Andrew Liveris or all these folks, these canaries in the coal mine that are dropping dead, and nobody's really listening to them. Guess what? I am. And a lot of other smart, money managers are as well, because they all know, that the higher you fall, higher you climb, the harder the fall. Okay, so again, can't fight the Fed. We have some bullish positions on, but they're short term, and we can get out of them pretty quick, and we have an ejection seat. Just be very careful getting long this market right now. If we're at 5-year, tell me. It's a rhetorical question since you can't answer me, but tell me where you're finding value in a market that's at 5-year highs. Not such an easy job to find value in a market at 5-year highs. Can the party continue? Absolutely. Can I be wrong? You bet. I don't feel it. Okay, folks, I've been doing this for a while. Okay, so there's our SITREP for today. I got to go. I have a live trading session at 1 o'clock with our Wealth Creation with Options folks. Manage a model portfolio there. That's doing great. Here's one trade we're closing today. Look at this one, folks. Apple, an Apple diagonal. I think it was about a month and a half, maybe 2 months, a month. $11,000 profit in a month and a half on Apple. Loving that. Going to close that one today and have a huge smile on my face about that one. A lot of other positions in my model portfolio are red. Why? Because they're hedges. And guess what? The market's continuing to go up and the party keeps going on. Yay. Until it doesn't. Okay, folks, so that's today's market sit rep. Be careful getting uber long this market. If you do and it works out, great. Congratulations. If it doesn't, it's going to hurt. Okay, so I'll see you with tomorrow's sit rep, market sit rep, and happy hunting. Make sure you hedge.